human services. I just want to say a couple of words to provide an overview, and then we'll bring Dr. Allen and Commissioner Mayhew up to talk in detail about some of the proposals that are in the budget today. But, first I just want to point out a couple of things. The Constitution requires that the state of Maine and that the governor of the state of Maine put forward a balanced budget. So, of course, this budget is balanced financially and fiscally, but more importantly, it's balanced from a policy priority point of view. It's balanced because it lays out a path. It's balanced because it builds off of the accomplishments of Governor LePage's first two biennial budgets. Governor LePage, of course, just re-elected, and in the first two biennial budgets solved, he confronted some major structural problems, bills that had to be paid, some tax relief in his first budget, but much more to be achieved. Now he has put forward a clear vision of priority and a long-term view to move Maine in a posture of more fiscal stability, not only stability, but competitiveness, and to address the issues related to the loss of some of our citizens that are moving away from Maine because of our tax penalties, and the desire to attract new citizens into the state and energize both investment and opportunity in the future. I know you're interested primarily in the components around the tax relief, tax reform package, and it's important to realize that it is just that. Both major reform, looking ahead to restructure Maine's antiquated, non-competitive, out-of-date tax code, but also a proposal that provides tax relief. When fully implemented, citizens of Maine will see $300 million of overall tax burden reduction from this proposal. Not only a realignment and a modernization to attract investment, but also $300 million of tax burden reduction. In addition, other priorities in this budget include public safety and components that deal with the scourge of illegal drugs and trafficking in the state, investments in higher education, and several others. But right now I'd like to bring Dr. Allen, Associate Commissioner of Tax Policy, Mike Allen, to talk to you in greater detail regarding the tax relief, tax reform package. And we will be here obviously for more questions, followed by Commissioner Mayhew to address several innovative and clearly well-prioritized positions from the Department of Health and Human Services. Dr. Allen.
Good afternoon. As the Commissioner mentioned, this proposal builds on the tax cuts that were enacted during the Governor's first term. It's a tax reform and relief package. We estimate that it will provide $300 million of net tax relief to Maine families by 2019 when it's fully phased in. There are 4 areas that are targeted or objectives of the proposal: competitiveness, simplification, stability, and fairness. Under the category of competitiveness, it reduces the top marginal income tax rate from 7.95% to 5.75% by tax year 2019. The chart to my left shows when the governor first came into office, the top marginal tax rate in Maine was 8.5%. It dropped down to 7.95% during his first term. By the end of his term, it will drop to 5.75%, below what the original top individual income tax rate was in 1969 when it was created, was 6%. As both the governor and the commissioner pointed out, a key component of this is to relieve the tax burden on retirees in the state. It will increase the current retirement deduction as $10,000, and it will increase it to $35,000 and $5,000 increase. It will also eliminate the tax on military pensions, and that piece of the package will become effective immediately in tax year 2016. It reduces the top corporate income tax rate. We currently have a top corporate income tax rate of 8.93%, 8th highest in the country. This will drop us to 6.75% over a number of years, so that by 2021 we will be at that low rate of 6.75%. It repeals the main estate tax, and beginning in 2016, the current $2 million exemption will increase to $5.5 million, basically equivalent to the federal exemption amount. And then starting for deaths occurring after 2017, the estate tax will be eliminated here in Maine. We understand there are only 19 states, counting Maine, at the moment that have a state estate tax, and that will eliminate it here in Maine. The Governor is proposing to modernize Maine's sales tax rates and base while keeping the tax rates at a competitive level. The current 5.5% sales tax rate will go to 6.5% on January 1st of 2016, and the tax on prepared foods and meals will drop from the current 8% rate down to 6.5%. So there'll be a equalization of the general sales tax rate with the tax that people pay when they go out to eat at restaurants. The current service provider tax will increase to 6%, and the 8% tax on lodging will stay at 8%. That will continue in 2016. And the current 10% tax on short-term auto rentals will decline from 10% to 8%. So essentially the state will have two sales tax rates, a 6.5% rate and an 8% rate. As far as simplification, the proposal repeals a number of cumbersome and obsolete income tax credits and loopholes. It looking at the tax expenditures going in, looking at credits, deductions that only a handful of taxpayers take on an annual basis. This proposal eliminates many of those. It eliminates the corporate alternative minimum tax. In the Governor's first tax cut package, the alternative minimum tax was eliminated on the individual income tax side. This equalizes that by eliminating it on the corporate side. Maine is only one of 8 states that continues to have a corporate alternative minimum tax. The proposal eliminates itemized deductions, but to make sure that those people that have significant medical expenses that they itemize on their state return, it creates a new medical expense credit that will be equal to 5% of whatever they itemize on their federal return. The state's telecommunication excise tax, which at the moment generates a little less than $8.5 million for the state's general fund, will be eliminated, and that property will be transferred to the municipalities where it resides and will help expand the property tax base for those municipalities. The Governor is again proposing to repeal the current Better program, transfer that property into the current business equipment tax exemption program. It'll be phased down in 25% increments. And going forward, new retail property will no longer be eligible for either program. Stability of the tax system. Under this proposal, revenue sharing in FY16 will be flat compared to this fiscal year. It will be a targeted $62.5 million to the municipalities for revenue sharing. And then in FY17, municipal revenue sharing is repealed. But to help the municipalities regain much, if not more, of that loss in municipal revenue sharing, the proposal is to allow municipalities to begin taxing nonprofits in their communities. The proposal will provide no longer a 100% exemption for those nonprofits, but now a 50% exemption. And it will also provide a $500,000 threshold. So if the value is less than $500,000, there will be no tax. Anything above $500,000 of value in the municipality will be taxed at 50% of the value. There's a number of proposals in the budget to deal with the budget stabilization fund and continue building it up. There's always been an issue with the bond rating agencies wanting the state to have a fund available when the next recession hits. in the governor's budget, includes a number of proposals to do that. Current sales tax base is highly reliant on two items, automobile sales and building supply materials. We estimate that approximately close to a third of our sales tax base comes from those two categories. And all you have to do is look at the last recession and see how our sales tax revenues plummeted when the two hardest hit areas of the economy, automobile industry and residential housing, took a significant hit during that recession. So this proposal will modernize the sales tax base to reflect, as the governor and the commissioner indicated, the reality that services now represent a significant portion of the main economy and the national economy, and will expand the sales tax base into many services. However, most of the services that are many of the services that are currently exempt for necessities of life, such as medical care, grocery staples, will continue to be tax exempt. Fairness, in order to offset the regressivity of the expanded sales tax base, the proposal has a refundable sales tax fairness credit that is designed to offset not only the expansion of the sales tax base, but the increase in the sales tax rate for lower income and lower middle income households. As the governor pointed out, that will phase out as your income rises. It also has a significant expansion in the property tax fairness credit to make sure that those families that are overly burdened by the local property tax get additional relief. Families will be eligible for up to $1,000 under this proposal of property tax relief, $1,500 of relief if there's a member of the household that's 65 years or older. The homestead exemption will be expanded for those over the age of 65 and eliminated for those under the age of 65. It's currently $10,000. Again, if you have someone in the household over the age of 65, it will double to $20,000. Combined, as the Commissioner and the Governor pointed out, we estimate that this will reduce the tax burden on Maine residents by $300 million by 2019. We passed the Governor's proposal by the Tax Foundation in Washington. It's a nonpartisan group that tends to look at both federal taxes and state-level taxes. They have analyzed the Governor's proposal. They'll be releasing a report on that sometime later today. And to the chart to my right, you'll see that they estimate that prior to the Governor coming into office, our state business tax climate index, we were 37th in the country. It declined to 33rd in the country based on the Governor's policies in the first term. And they estimate if this proposal passes, Maine would move to 23rd in the country. A significant improvement on our state business tax climate.
Thank you. Commissioner Mayhew.